right, welcome everybody to the September Investing in Identity Forum. My name is Travis Jure. I'm the founder and CEO of Liminal. That's right, a new brand, same old crew here to walk you through the monthly trends in identity. But before we get there, I want to quickly introduce Liminal to everybody. We are a boutique strategy and advisory firm. We're serving executives, corporate strategy, innovation, and M&A teams focused on digital identity, fintech, and cybersecurity. And the way we do that is we offer 4 specific services: market intelligence, product design, go-to-market, and M&A and transaction services. So if those sound appealing to you guys, or if you just want to pick our brains on anything to do with identity related to strategy, M&A, or product, feel free to give us a ring after today's session. And so with that, we're going to talk today about a handful of things, a lot of the deals that are happening through September, but also Amazon's right to win. I know a few of you probably just kind of clammed up a little bit when you heard those words. We're going to break down what's going on with Amazon and why we feel like they are well positioned with their new Palm Reader product. So introducing the typical cast and crew, we have myself, Cameron D'Ambrosi, Managing Director here at Liminal, and Dave Fields, partner at PTB Ventures. And then joining us for the first time is Will Charnley, our manager in our advisory services practice. Welcome, everybody. Thank you all for wearing your vests, except for Dave.
Oh, thank you. I do have a vest here. I'm not wearing it, but just to hold this up, I do have my USA Ryder Cup vest just to show it off to everyone. God bless America. Historic victory yesterday. Thank God for golf. Cheers.
There you go. It's a great time of year in New York for golf, isn't it?
It is. Yeah. It's very nice.
Yeah, it's great to be outside and stuff.
Yeah.
So,
yeah.
Great.
Thanks.
You're welcome. All right. Well, let's jump right into it. So we have some notable deals. September started as a kind of a slower month, but ended up being actually a pretty great month for financing transactions within the space. Really kicking off with Persona doing the $150 million round at over a $1.5 billion valuation. This company is only a few years old. To see that kind of traction is absolutely wonderful. We've actually talked about Persona a couple times this year already, so I'm sure we're going to come back to them here in a minute. JumpCloud taking down $159 million on over a $2.5 billion valuation for cloud identity. This is a really significant raise for the entire kind of segment around PAM, identity governance. Again, we're going to talk more about the landscape here in a second, but this is a major round, major raise, and a significant kind of point to kind of shine for JumpCloud. Awesome job. Savient taking down $130 million. Advanced AI, if you guys aren't familiar with these guys are out of Singapore, have built some really cool technology over the past couple of years, have really gone from really kind of unheard of company to raising $200 million. But on top of that, they have a significant data science team focused on this. This is a company definitely to be watching here in the future. TrueLayer taking in $130 million at over $1 billion for open banking, which of course was kind of the trend of the month. And then ID.me bringing on another $100 million from Fortress debt financing. Again, kind of shaking things up quite a bit. This is the second time ID.me has raised $100 million this year to continue their growth. I think the most surprising and amazing thing they had in there was in the press release was that they have 2 contracts with the U.S. government for over $1 billion each. Kudos to the whole ID.me team for a very significant showing so far this year in the past couple of years, and then being rewarded in the form of investment. I'm going to move along because we do have some really great investment trends we're going to dig into with Will here. And I want to make sure we have time for that. Notable M&A. So we do have some great M&A this kind of month. First, the biggest one here in my mind was TransUnion and Neustar, buying Neustar out for $3.1 billion. This is just a significant kind of disruptive transaction. I think that most mobile identity and device intelligence companies out there saw this as either a major win for the industry or a potential major threat to their current business. People are looking at this and saying, what can this bring to TransUnion? I think there's a lot here. Obviously, they called out the digital marketing side, but also do not forget about the fraud mitigation capabilities coming from Neustar on this. These guys have built a significant fraud graph signal system that is really quite amazing. Second was BitSights. taking in Visible Risk. We covered Visible Risk in May because they also took in some money from Moody's. So pulling up their old logo again for this, I thought was a bit surprising. Very interesting to kind of get the take from Moody's on this acquisition, but not super surprising to see some early consolidation, or at least bringing these kind of cyber risk startups together. Companies focused on creating risk scores around cybersecurity. And then last but not least, Mastercard making 2 transactions this month with CipherTrace. And then I don't know how you say that word. Cameron, how do you say that name?
You know, I've been calling it Aya. On their own videos that they post, they don't say the name of the company. So I think there's no accepted pronunciation as far as I'm concerned. Dealer's choice.
Dealer's choice. All right. Well, actually, since I asked you a few questions there, Cameron, what are your thoughts on these notable M&A deals so far this month?
I think it's, further confirmation that identity is the hottest game in town right now. I think particularly, Mastercard expanding their open banking reach shows the true value of this open banking data, that it's not just about facilitating the transactions. It's about being able to understand these relationships that consumers have and add value across that identity lifecycle. I think to some degree, Neustar tells that same story in a different facet, less about the connections between those transactions and more about those connections between individuals and their devices. But I think you can draw that same trend line there. And BitSight Visible Risk, cybersecurity, I think going to continue to be top of mind. Again, the relationship between people and their devices, that's necessarily a component around cybersecurity. And understanding, what risks your enterprise has around that, going to be increasingly critical. So makes a lot of sense to continue to see startups getting snapped up in that space.
Yeah. And I'm going to come back. I know we got Dave and Will going to be asking you guys some questions here shortly, but wanted to pull this up right after kind of, talking about the hottest game in town. Wanted to take a different look at this. If you guys are familiar with our landscape and how we typically overlay the companies every month and where those deals are happening and what solution segments that they are currently focused on. You can see here in the blue, we have the financing, and in the green, we have the M&A. Now, obviously, we didn't track all the deals for this particular presentation this month. If you would like to talk about all the deals that happened this past month or this past quarter, feel free to reach out to us. We do produce a comprehensive investing trends report. But here you can see a lot of the financing being relatively consistent throughout the year so far in order of where, right? A lot of identity verification, proofing, KYC, regulatory compliance, seeing it kind of in the workforce IAM, also in the customer IAM, the SIAM piece of this, authentication, M&A, data aggregators, credit bureaus, right? We've seen multiple acquisitions in the space so far this year. Not super surprising to continue to see that trend, specifically around workforce number, as we called out APRIS Insights last month with Equifax, and then identity graphing and resolution, something that we've seen a lot of M&A this year with Tapad being acquired by Experian early on, and not too surprising here. Dave, you're seeing a lot of the financing come through here. Obviously, I'm going a lot faster through this segment because we want to talk about the investing trends. But just given everything that you're seeing, what do you take from all this as an investor? Who's really popping that's just currently raised money? And then also, not to put you on the spot here, but where do you see maybe there's some changes happening where we're going to see less financing out in this market, or just an increased financing in some of these segments?
Yeah, I think there's, the transaction that I would really call out as unique and interesting is the ID.me credit facility of $100 million. I think we've talked about the velocity, both velocity and scale, magnitude of how much capital is coming into this segment. But, this is the first time we've now seen that financing and capital really take a different form in terms of debt versus equity. And I think that's really, so it's interesting for a couple of reasons. So I actually started my career as a corporate credit analyst, and you're kind of taught there's really kind of 3 primary methods of repayment that you analyze when you're looking at corporate credit. The first is kind of cash flow. What is the company's ability to generate currently, what is their current cash flow, and what is their ability to kind of repay their debt. I'm not an investor in IDMe, they're a private company, but as a company that's at growth stage, I would kind of assume that they're probably burning cash right now. So they're probably cash flow negative. That's why they're going out to market for equity capital. So it's atypical, or it's certainly a change to see see a company raising such a large sum, which is not likely to be cash flow positive. The second form of repayment that we were always trying to look at was asset coverage, which is typically you're looking at what is a company's receivables, inventory, and hard assets, property, plant, and equipment. What is that asset coverage as a ratio to then the debt facility? Software companies don't really have a lot of hard assets. They don't carry a lot of receivables. There's not inventory, and they don't own. It's unlikely that they own a lot of real estate or other forms of equipment that certainly $100 million would be a lot. They probably don't have much asset coverage, which really leaves the third method, which is refinancing. And so that's a real change where somebody's willing to extend $100 million of credit purely on the basis of the expectation that they're going to be able to refinance that facility at a future date. So that represents a real inflection as far as how capital is being made available to software companies. Typically, you wouldn't see this type of credit facility extended until somebody's either in the public markets or certainly they have meaningful free cash flow or EBITDA generation. And so this kind of reflects, a trend we're seeing where it's both the scale of capital that's being made available to private software companies, but also the form in which it's being extended. And so I think that's, we've talked about M&A. I think the fact that a company like IDMe can raise $100 million of credit just reflects the fact that we're going to now see companies that previously were much more focused on going their own way, building their own product portfolio and taking that to market. Now they're also going to be simultaneously looking at M&A strategies. And so I just think it represents the fact that everything is happening bigger, faster, stronger than it was before. And so to me, that's the most interesting transaction that we saw this week as far as being the most unique and something that I think is a trend we're going to see continue.
I think it's actually a really great point. And I want to actually have a few questions on that. But before we get there, I'm actually going to move us into our second part of the session here, which is our investment trends, which of course we brought Will, one of our managers from our advisory team who focuses largely on growth strategy and transaction services to take us through. But, while we're going through this, I think keeping that in mind, Dave, with, hey, we're at this kind of maybe huge critical moment where things are shifting, right? And how people are getting financed it seems to be changing. One of those things, and I know we don't cover here in this trends, is the stage of investor, right? We see growth private equity kind of playing that, trying to dig down lower to kind of late stage VC. And we're saying late stage VCs kind of come up to the A and B rounds. So the whole thing kind of seems to be shifting a little bit up. But with that, want to go ahead, kick it over to Will.
Thanks. Excited to be here. Excited to finally get on with you guys. So so when we talk about the investment trends, I really want to center on this slide for a second here. We've seen a lot of noise around many of these notable exits in the space. We've highlighted some of the M&As and IPOs. I like to kind of term these guys as the ones, my mom will text me about. She'll see these and she'll understand that these deals are actually happening. Kicked off the year with Count and Equifax, and we've seen a steady kind of march along month by month of large IPOs and large M&As in the space. Obviously, Okta and Auth0, and then 2 weeks ago, TransUnion acquired Neustar. When we actually dig a little bit deeper and look at the exits in the space, while these are the guys getting a lot of traction in the news cycle, you actually start to see something really different when you look at the exits in the space, especially for some of the smaller deals under $2.5 billion. And if we go to the next slide, we can see, actually looking at some of these deals under $2.5 billion, we see a really different trend. We see Q1, kind of a slow start to the year. We had 9 deals totaling just over $2 billion. Q2, there was really a flurry of deals. We had 21 exits, that's M&As, leverage buyouts and IPOs, exceeding $5.6 billion. Really that's what we've seen historically as well. And then Q3, if you kind of take out some of those larger deals, you take out that Neustar, you take out some of those IPOs, you really see a little bit of a quieter Q3. So deal volume has been down this quarter from really a very robust Q2, 12 deals so far. And the total exits, when we look at those under $2.5 billion, it's only been right around 1.2 billion for Q3, more in line with kind of what we saw to the beginning of 2021, as opposed to that jump up in Q2. So when we with that being said, it's not that investment into the space has stopped or even really slowed down. And I think when we actually look at the funding that's gone into the space for a lot of growth, you can really see that. So this is highlighting the raises in the space, looking at the angel funding, the VC funding, the private equity funding. Q1 is a very similar story to what we saw on that exit slide. Relatively quiet, obviously the volume a lot higher in this space than on the exit side, but there were 22 deals right at 1.2 billion. Q2, again, really big quarter on the funding side of things. We saw 29 raises, $3.7 billion, that kind of deal, the average deal price going up. And I think where the story really differs between our funding data here and our exit data is that we've seen Q3 kind of maintain and even go up in some ways in terms of the amount raised. So Q3 has seen 21 raises, but those companies have had over 4.2 billion, outweighing Q2 and Q1. And the average raise this quarter has been right around $200 million. And as we get to the next slide here, we see this flurry of deals, Socure sneak in there in kind of that Q1 timeframe. But really, every few weeks through Q2 through Q3, we've seen 100 million plus deals. We have some of our, what I'll just kind of term our mega deals, our Forters, our Trulius, our Transmits, who are, raising enormous amounts of money that they're going to be deploying and are deploying right now. And then we've seen, Travis already talked about this, some of our repeat raisers so far, your ID.me's, your Persona, which I think is really interesting, right? They went and had their Series B in May, they raised 50 million, and then within 3 months have now raised another 150 million. And so we've seen a lot of companies raise, and I think the next kind of question we're really thinking about as we think about our advisory practices, all right, what are these folks doing? And so we spend a lot of time talking with the folks we work with about this, which is our integrated identity platform capabilities, really looking at the customer journey from new engagement to registration, where we're seeing a lot of these raises happen, ID.me, Persona, Jumio's on there, all those folks. And then beyond that kind of T0 onboarding moment to log in, transactions, ongoing engagement, we really expect to see a lot of this capital get deployed across that customer journey as folks look to build out capabilities, buy capabilities, and get additional value and money from kind of this customer journey here. So I'll flip it back over to you, Travis.
Yeah, no, I think that's extremely helpful. And just to kind of land on this slide, I know we use this slide a bit when trying to simplify the landscape, right? There's 35 different solution segments that are underpinned by over 500 features for our landscape. When we look at this, we're really just trying to simplify it to there's 5 steps here, right? And we're always, I think, trying to do that. But one of the biggest kind of trends that we're starting to see here is a refocusing almost. It seems like companies are refocusing on a component of the customer journey versus the entire customer journey. And that's kind of why, companies that are focusing on the entire customer journey, while there's that focusing effort, are being rewarded for it, right? Alloy is a great company. They are obviously very much the belle of the ball right now. Lots of excitement. I know Business Insider published $100 million raise from those guys at $1 billion valuation. This month, we didn't add it in because obviously it wasn't widely reported. The company didn't put it on there, but we're seeing orchestration vendors and orchestration solution providers become more valuable. So when we do see the ability to be across the entire customer journey and being successful at that, it does seem like we're going to see more raises, more dollars flowing into these types of capabilities to be across the entire platform. Last month, we talked about something very similar, right? The rise of the orchestration vendor. I think this double downs on that. We're going to start seeing that, especially as there's blood in the water for a lot of these specific capabilities aligned to specific steps within the customer lifetime or lifetime journey. Cameron, Dave, I'm going to ask you. I mean, anything you guys want to add to that? I know it's quite a bit there, but anything you guys want to add to this as well?
Well, look, I know we're going to get to this in the prediction segment in just a second, but if you just go back to that timeline, I think there's about $3 billion almost worth of activity. I think a year ago, one or two 9-figure raises would have been really would have been brought a lot of attention from people in the identity ecosystem. And now there's almost, on average, there's like 2 per month. And now we're seeing $200, $300, $400 million raises. We're seeing companies complete multiple 9-figure raises in 1 calendar year. So game's changed, or to quote Swim Charles, the game hasn't changed, it's got more fierce.
I was told to use more baseball analogies when talking about these things, so I'm trying to keep up with it. But
okay,
yeah, Cameron, what are your thoughts?
I mean, I think it ties back to my previous comments, which is we are continuing to see companies looking to unlock value across the breadth of the consumer identity lifecycle, whether that's relationships between you and the transactions you're conducting across time, whether it's the relationships between you and your multiple devices, being able to collate, make sense, orchestrate all of these signals, all of these different facets, attributes of your identity was previously a nice to have. Now I think it is becoming table stakes, and you are beginning to see the platforms that do not have those capabilities go out and buy them or build them. And I think you're going to continue seeing more acquisitions as this demand, heats up further.
And maybe just, one last comment, from in the product sense, we're talking about orchestration and the blurring or combination of abilities and companies building across multiple solution segments. But that's also now being reflected in the financing markets as well, where we're seeing companies raise both what we consider venture or growth capital, and then also raising capital that traditionally would have been used, that would have been allocated to more mature industries for consolidation purposes, right? So we can really draw a through line from what's happening in the product side of the house all the way through the financial side of the house.
Someone's definitely trying to stack the deck here for his predictions. We are going to be doing a review of our predictions from earlier this year, everybody. So I think someone's trying to make a case for himself here. But with that, I don't blame you. I think you got the best ones. All right. This is our main topic for today. We're going to talk about Amazon and their right to win. Obviously, when asked about what does it mean when we say the right to win, I think I want to definitely call that out first. What we're talking about here is when you have a solution provider, a vendor, or someone out in the market that has the right product at the right time and has a customer base that's willing to pay for it, that provides you a right to win. There are obviously lots of other players out in this market that can do something very similar, but Amazon's pure size, scale, capabilities really kind of sets them apart, which is why we think it's important to talk about Amazon One. So, Dave, I know you're impassioned by Amazon One, so why don't you kind of lead us to talk kind of about your thoughts with this product and what does it mean in the market, and then I'll ask the rest of the team here to kind of weigh in.
Yeah, there's a couple interesting points to be made here. One, I think, I think this is going to take off. I know some people probably think that privacy concerns or criticisms or concerns about privacy and concerns about the market power of big tech will be an impediment to use. I think that those concerns typically arise out of use. To put maybe perhaps a crude metaphor, in the late 19th century, when horse and buggy was the predominant mode of transportation, people weren't particularly concerned about seatbelts or drunk driving, right? Seatbelts and drunk driving lagged use and adoption of the technology rather than preceding it. And so I think, regardless of the social and political headwinds of today, I think this is something that's going to be used. The other interesting point that I think there's also some interesting points here to be made around the palm as a modality and also potentially the method. Now, I don't have any particular insight into the exact beyond the descriptions that Amazon's talked about using computer vision and artificial intelligence to do this. I can't speak to a lot of specifics, but I do have some insight from investing in a company called Element, which is in the PTV portfolio, which uses deep learning and has used the palm as a modality for biometric authentication. So I think the modality is very interesting. Obviously, if you look at the graphics right there, we've got a contactless method. So this is unlike traditional fingerprint methods, which do require us to press down on a specific piece of sensor or hardware. So this is a technology that's potentially fit for purpose in COVID times or where we're concerned about shared surfaces. There's also the point that the palm is a modality that doesn't exist in existing methods, right? So if you think about legacy methods for biometrics, we have databases of faces and databases of fingerprints. Those databases typically are retaining the images they're retaining the biometric templates in a method that really reflects the state in which they exist today, right? So, I put my fingerprint in ink, I put it on a piece of paper, that piece of paper is retained to then match at a future date. That biometric template is made and it's retained. Same thing with faces. So that doesn't, we don't have an existing database, or this isn't a modality that's been taken to scale yet, which then brings me kind of to the next point, which is when you're using computer vision, particularly deep learning techniques, typically what you're doing is you're capturing images of the palm, but then you're transforming it into a mathematical abstraction. So that's how these AI image classification systems work. They're not actually retaining the underlying images or models of the biometric that generated that user model. It's being transformed. And it's really akin to sort of like a one-way hash function where even if there was a database that or that a bad actor gained access to, even if they had the algorithm used to generate that user model and the user model itself, those two things would not be sufficient to then reverse engineer the biometric modality that created that user model, right? And so there's some real privacy and security benefits to using both the palm and some of these newer artificial intelligence techniques. And so I think it's very interesting. I think it's exciting. And I'm interested to see how it's rolled out and how it's adopted.
No, I think that's first off an amazing context, and I think you're underselling your knowledge on the space. Obviously, we all know Adam Perold, one of the brightest minds in the identity kind of industry, has built some really fantastic technology alongside this, and this is clearly the modality that he would favor, and I think that's pretty telling in terms of the applicability to it. Cameron, tossing over to you, you and I have worked on 8 or 9 projects related to biometrics since 2017, some of them dealing with elections in countries like Zimbabwe with APHIS programs and things like that, but also more recently thinking about kind of the curb to gate travel process, which is something we've covered on previous shows as well. What are your thoughts on this, and what are your thoughts just on the idea of biometric modalities used for seamless interactions like this?
So, I think some of the hype around this news cycle has gotten lost in the shuffle, in the sense that people are focused around the biometrics aspect and not the fact that this is an identity product, right? So I think that first and foremost, like, this is Amazon trying to create an identity layer that can follow you around from place to place in physical space, as well as potentially online. And I think maybe some of the coverage is missing that aspect, that this is a really exciting development in terms of bringing identity more mainstream. So I wanted to hit on that. The other interesting element is, it is pretty obvious that Amazon is looking to plant this as their flagpole for expanding their right to win, following the theme of the slide, in identity more broadly across brands and relationships that maybe are not anchored on the Amazon platform. They've already announced a partnership with AXS to do Amazon One palm scanning for things like concert admission. So I would consider that a clear shot across the bow of a certain publicly listed biometrics company, Clear, in case that one sailed over your head, where Amazon, I think, is going to push increasingly into other spaces in the physical realm, whether it is things like getting on a plane, going into a concert, universities, for example, things of that nature. The other element about this announcement that I thought was really interesting is the fact that Amazon has made it clear that they hope to license this to other bricks and mortar retailers, again, looking to serve as that identity layer for these companies that maybe don't have the ability to develop their own technology. I think that's going to be really interesting to watch, because Amazon's relationship with other retailers has typically been a bit fraught. They've been accused, for example, of using shopper data and shopper preference data on Amazon to develop their own lines of products. So when they see something that's selling like crazy, they go and develop an Amazon Basics version of it, and then they pop that to the top of their search because it's their platform and they're entitled to do that. So if I was a retailer, kind of the last thing I would want to do is maybe insert Amazon between myself and my customers, because presumably Amazon is going to be able to understand, where are you going as a consumer, what things you put in your cart to pay if you're checking out with Amazon One. So I think it's going to be really interesting to see, as a proxy for big tech being able to bring an identity layer to fruition kind of across use cases, how Amazon fares. Because I think one of the major concerns for these companies that are not big tech players is, if I let these guys into my business, is this going to pose an existential threat to my relationship with my customers long term? Are these guys going to try and cut me out? So something to keep an eye on as Amazon continues to try rolling this identity platform out across different industries.
All right. I think that, everyone should be a little bit fearful of big tech, when it comes down to these types of things, especially when you have ubiquity, the size, kind of like Amazon does, how they can actually use this, even if they don't intend to later on, right? Maybe the intention today is one thing, and then you have a product manager 10 years from now with a whole bunch of data and a bunch of capabilities, might make a good pitch for another, $2 billion top line revenue, right? So I think it is always something to be kind of worrisome about. What I do love here, though, Cameron, I have to say, it's the first time on this show that you're the contrarian. And I just want to kind of earmark that, just as a special moment. So, usually overly optimistic. No, I appreciate that. But Will, want to turn it over to you. What are your thoughts on this? Obviously, you just heard, they probably just took all your talking points, but, obviously we've done some curb to gate work recently. Here's another biometrics modality kind of hitting the shelves, if you will. What are your thoughts on this? And this, I guess, broadly, the biometrics space?
Yeah, I think Dave and Cam hit on a lot of the salient points, but I would say from a modality standpoint, I think it's really interesting. We've seen kind of this rush to contactless, and that's really kind of bore out the facial biometric market. And certainly there are a lot of privacy concerns around facial biometrics, rise of deep fakes. Any high school student could put a picture of me on someone else's body and pass it off as someone else. So I think the modality is really interesting. I do get the reticence for Amazon. Certainly any storing of that sort of data, can be alarming. I do think, when we think about Amazon and how they're going to deploy this strategy, and we've seen this in the past as well, when there's convenience tied to that technology, when it allows you to do something easier, quicker, that there is use case viability. And I think something like Amazon One does have that, and Amazon certainly has the ubiquity to reach scale for something like this. So yeah. I may be contrarian to Cam's contrarian. So
sounds like it. I think I'm in the Dave camp on this. I think it's exciting. The reason why I think it's exciting is I look at biometrics as kind of the real kind of future passwordless authentication. And I think that if you draw a long enough timeline, biometrics kind of runs this game. Data kind of falls off to the side a bit. Anytime you can have deterministic criteria, I think that's a game changer. So in my opinion, there are some really interesting facial biometrics companies currently on the market, either raising money or for sale. We're going to see the consolidation of facial biometrics and liveness detection happen over the next 18 months. And with that, we're going to see kind of the rise of more unique integrated biometrics technology like this in these stacks, right? As we go from digital or physical to digital, we also need to go digital to physical. It's the other way around. So I think more biometrics modalities are going to enable that type of experience. And I think that customers want it. So very, very exciting. This will be one that we will definitely be tracking, and one that we will come back to probably after the holidays to see if there's any sort of consumer numbers that we can kind of glean from this. So with that, of course, would love to say, if you have any thoughts on Amazon and their right to win, you can go ahead and email us at info@liminal.co, and we will love to have a chat about it. So with that, we are on to our Fields of Dreams segment of the program.
Speaking of deep fakes and putting people's faces on bodies that don't belong to them, I am not the star. I am not Kevin Costner. I did not star in a movie about baseball in an Iowa cornfield. But sorry, I jumped on your.
For the record, we did incept the MLB Field of Dreams game with this graphic, though.
Yeah, it only took me 10 hours to make, but definitely worth it. I'm not a graphic artist, but you look like you should be there. I mean, it kind of works.
Yes, sure. I guess it does.
I obviously couldn't figure out the Fields of Dreams part, moving the field over. So all right, anyways, on to this one. So what we thought would be super fun is, rather than give you guys another prediction for this month, we're going to go through some of the predictions that we've had since earlier this year. So I'm going to go ahead and apologize to Will. Sorry, Will, you didn't have any predictions on this. So you're going to be kind of judge on some of these here, just to, kind of make sure that we're playing fair.
I'll keep you honest. Yeah.
Yeah. Keeping us, we need it. We need it, especially with how many vests are on this call right now. We definitely need it. So with that, we're going to go ahead and start with, I believe we have June. June is our first month here. And so back in June, these were the three predictions that we made as a collective here. So Dave, we will see $2 billion in investment before the end of the year.
Yeah, we're already past that, right? So I think I need to rethink some of my. Now, this was a good prediction because it was precise, which means it was easily falsifiable or validated. Certainly wasn't bold enough. I was very conservative, and I need to be more thoughtful of coming up with something that could actually be wrong, right? We're well past that by now, and we could see $2 billion in deal activity announced in the next 2 quarters, and it wouldn't surprise me. We could see $2 billion of sorry, not deal activity. I should be specific. Financing activity. We could easily see $2 billion of financing activity just in the 4th quarter. That wouldn't surprise me. That's not my prediction just yet. But that wouldn't surprise me.
Yeah, you're the clear winner on this one. I think that's for sure. Cameron, LATAM is the breakout star for identity startups. I think maybe still waiting a little bit to see some of those shoes drop, unless you have more of a defense to your claim here.
I mean, I think Unico becoming the latest Brazilian unicorn, fourth Brazilian unicorn of the year by my research, I think makes that if not an outright win, close to it, solid RBI double, maybe not a home run. ID Wall having that $38 million Series C, another example of that. And SoftBank recently announced another $3 billion LATAM focused fund that they're spinning up as well. So I think we're only going to see continued acceleration in the identity space in LATAM, whether it's delivery services, whether it's insurtech, whether it's open banking, all of these things that are driving some of these unicorn valuations in Brazil have identity at the core. And I think you're going to continue to see big numbers, big valuations coming out of the startups servicing those verticals.
All right. I'm not going to challenge that with our independent referee, but I do appreciate. I think so. I mean, here's the thing. I lost on this one. So still in the early innings with consolidation IPOs across the board. Clearly wrong. Right. So I'll go ahead and bite that. You guys told me I was going to be wrong at the time. Definitely wrong here. Very clear that there is no real peak in sight yet for this market. All right, this is taking us now to May. So we're walking backwards a little bit in time here. Dave, the market will reward companies that blend verification, authentication, and authorization.
Yeah, I mean, I think so certainly the slide that showed the different capabilities and the different journeys, how companies are, that's a good depiction of it visually, right? I think to put this financially, one of Will's slides talked about companies growing at 100%, being valued at 15 to 30 times. These are transaction-based companies. Those are largely onboarding, KYC, identity verification companies where something is largely a one-time event. When you look at companies that are in more of the authentication or authorization space, those are subscription, those tend to be SaaS models. And SaaS models, if you're growing at 100% plus right now, private market, 30 times would be certainly be the low end of what your price to sales multiple would be. Companies right now in the SaaS space growing at 100% are being valued at 50, 100 times price to sales, depending on what stage you are, et cetera, et cetera. There are some other caveats on that, but like 30 times would be low for a company growing at 100 times. So the market, that's certainly true. And companies that are able to effectively blend, really use onboarding as, these are B2B to C companies, right? But companies that have an onboarding product that kind of bootstrap the customers they're serving, the enterprises they're serving, into then being subscription-based clients. Those are going to be incredibly valuable companies. Those are going to be decacorn companies. So that's what I expect to see. And they're going to be the consolidators in the space.
No argument there. Cameron, we are witnessing the peak of SMS OTP.
I'm going to go ahead and maybe give myself an incomplete on this one. I think this year may end up being the inflection point. I think we'll have to circle back on this one. Like we alluded earlier, JP Morgan, one of many large institutions moving away from default SMS OTP for multi-factor authentication for their platform. I think you are going to continue to see this trend accelerating. And we understand that, the major players who provide SMS OTPs out to all these enterprises are looking for alternatives as they build out their digital identity platforms to the technology. So have not seen the proof in the pudding yet, but the smells that are coming out of the kitchen indicate that it may be, ready soon. Speaking of strained analogies.
No, yeah. Sorry, everybody, for laughing into that's funny. Yeah, I think, yes. And I think our last one here is we are going to start to see more companies launch identity wallets and personal identity ecosystems. So this is back in May. Apple Wallet was launched in June. So I think, calling that one a little bit on its head. But I think we're at the very beginning of this, right? I think Apple, while they're taking a bit of a lead, does not represent the only one out in market. ID.me taking on that additional money also represents the power and strength of personal identity ecosystems and what can be done with an identity wallet. And so we're going to continue to see this. I think that this prediction was a bit of an easy one, given all the trends out in the market. But generally speaking, I think we are going to see a flurry of wallets and pies, especially from companies like NortonLifeLock, Avast, Allstate, et cetera, that are interested in playing a role in this space. All right, so we've been through June, May, and now we're into April. All right, Dave, you want to walk us through this one?
Yeah, I mean, this is kind of like a not particularly bold prediction. This is probably the least bold. Like if it's technology and it's potentially innovation that's coming from America, the EU is going to regulate it. So,
we'll give you a solid first base.
Well, yeah. We'll use baseball. This is like a bunt single where the pitcher was undecided whether to throw to third or first and take the easy out, and the indecision allowed me to get to first base. Sorry, are we still doing the strain analogies thing? Should I mix that with football too?
That was good. Okay. That was good. Yeah, we'll come back to this one. We'll come back to this one.
All right.
All right, Cameron, PACT Act, right? Obviously, this one had major implications at the time. I think we saw. I mean, you had been covering it. We had done some of the work, kind of around the PACT Act. What are your thoughts on this one?
I give us a true on this if we're doing a little PolitiFact ranking. I think first and foremost, we have seen that for the vendors who wish to stay in the online retail space, they have had to engage with age assurance companies, which I think has been a major tailwind for those platforms, as well as the companies that basically could not afford the compliance washing out of the space. So I think we're still seeing the long-term impact on the broader kind of e-cigarette cannabis space when it comes to how they facilitate online commerce and the ability to comply with those age assurance restrictions. I think, and this is not necessarily part of this prediction, but just newsjacking it in the PR parlance, I think we are about to see continued push around age assurance globally, whether it's nicotine or other products, as well as content. So stay tuned on this space. I think this is the first of many pushes we're about to see in the age assurance space in general.
Yeah, can't disagree there. And then my last one here is ForgeRock's IPO is going to be a massive success and a tell for the entire market. I believe so far ForgeRock is up quite a bit on their IPO. I think this was actually before they even announced their IPO, so it's around that time that we knew, we kind of had a hunch that this was coming down the pike. And right now they're up 30 some odd percent from their listing price just a few weeks ago. So I think this is a really good tell for the market. People are reacting well to ForgeRock. Now looking at what else is possible in the market, right? So this is a good tell. I think we're going to start seeing that consolidation that I said was going to happen in June. They're going to see some of those consolidation of the competitors to ForgeRock, cross governance, access management, and identity management. So I'm expected to see more of that. And then last but not least, this is our first prediction. So we went from June to May to April. So now we're back in March. Okay, so first prediction, NFTs and SPACs are in a bubble. So I don't know why we thought that would be a prediction. But I think what's interesting is when we were debating this earlier, that we're still a little bit undecided on it. So Dave, what are your thoughts on this our first prediction? What do you think about this first prediction? Now we're sitting here almost in October.
Well, look, there's a lot to unpack in those two things. I think everything in the blockchain and sort of cryptocurrency or crypto asset, digital asset space, there's so many terms for this, everything goes through a very rapid hype and mania cycle. and then they don't die. So NFTs, I think there's been, depending on which platform or type of NFT you've looked at, they've gone through these big, they've already gone through these like incredible boom bust cycles, I think, in a short period of time. So it's still unclear to me if the market has, the NFT market has reached its peak or not. I think that technology is around to stay. I think people who are discounting what's happening in kind of the crypto assets or the decentralization, Web3 space, whatever term you want to put on it, I think it's really a mistake to discount what's happening there, regardless of what we're seeing with financing prices and valuations and how things trade. And I think the same thing can be said for SPACs, where we saw a lot of them. There was a flood when it came to market, and now that tool is being defined and iterated upon. And I think it's going to be here to stay in some form or another, even if maybe A-Rod won't be SPAC investor of the year, right? Maybe that was a little overdone, but SPACs are certainly not going to go away anytime soon.
Excellent. Yeah. All right. Well, I know we are coming up on time here, so I think that's it for the main programming. We have some upcoming webinars. Obviously, if this is your first time joining us here on the Investing in Identity Forum, thank you for joining us. Please do add us to your calendar here. We typically join on the last Tuesday of each month, so you can see there October 26th, November 16th, and December 14th. Obviously, November and December isn't the last Tuesday of each month, but it'll be kind of around the holidays there. So please do go ahead and join us. And of course, you can watch this on your own time via the website. So if you guys have any questions or would like to discuss any of what we discussed today, or want to learn more about Liminal and our offerings, you can go ahead and contact us at info@liminal.co. Just want to go ahead and thank Cameron, Dave, and Will for joining us here on this September's Investing in Identity Forum. Thanks, guys.
Thank you.
Ciao.